you very much, and good to be here in the presence of some of my colleagues, other lithium producers and other materials as well. Yes, it has been quite an exciting ride. I've been with the company 5.5 months now, and yes, I'm experiencing quite a bit of, let's say, support from various customers, financiers, and colleagues. So we've got a good story to tell, and hopefully, again, today, I'm happy to be here. So if we look at the overview of the company, I think there's 2 points that I want to make here. Firstly, the location and the size of the Kathleen Valley asset, but we're more than just a single asset company. We've got the Baldania asset as well, and I think Tim alluded to that as well in his presentation. The other point that I want to make is about 21% of the company is owned by the board and the management team. So we have genuine skin in the game. Our interests are completely aligned with all our shareholders. So there is a fair bit of contribution that is made by all these parties when it comes to the decision-making process. We're also well capitalised to see us right through to the end of the feasibility study and well into next year when we do our financial investment decision. Our investment proposition. There are a number of elements that make a good project, and it starts with the resource. We do have a Tier 1 resource. It's globally significant, it is scalable, and it's got other attributes that make it Tier 1, and I'll explain that further in the presentation. It also is located in a very stable jurisdiction, and again, that point has been made today well and truly a number of times. And one of the points that I make when I do speak to investors and also financiers is supply, bringing on greenfield supply, is harder than people think. It will take time, there will be delays, especially in the current market, but we're confident that in a stable jurisdiction, and in a jurisdiction like ours, it's far easier than some of my competitors. The market outlook is positive, and I won't go into too much detail here because I've got a slide on that. The ESG position. I think it's also been mentioned in these presentations that our investors are demanding this, our financiers are demanding this, our shareholders are demanding this. And frankly, it is the right thing to do. So regardless of those above, we would do this in any event. And we are investing a significant amount of money up front to make us in a very strong position regarding our ESG credentials. And I'll explain that in the next slide. There is upside potential. With this scale, we can underpin further downstream processing. And we know, based on the analysis we've done, but others have seen this as well, there is further rent to be extracted from the value chain by going downstream. So we're studying that at the moment, and we're maturing our studies to move them into a next phase. We've got an experienced board and management team. I won't add up our combined years of experience because I think it's quite significant. Led by a number of people, actually. And we've got this offtake optionality. And I think the independence of our company, but also the fact that we are looking for a diversity of portfolio when it comes to selling our offtake, puts us in a very strong position. And again, I'll let you in on our strategy of that as we get into the presentation. Our ESG commitments. We are a greenfields project. So from the get-go, I don't have to overcome legacy issues to move forward in my ESG commitment. We want to make a positive legacy. So we start with the discussions we're having with our traditional owners, the design of the plant, the focus on all aspects of the plant to ensure that we are getting the best possible outcome. And we're talking to our customers in this regard as well, and understanding their commitments and how they align with ours and also our own values. And from the very beginning, we're going to start with proven technology. We've got a real time frame, no false promises, and we will be measurable. We're putting out our first sustainability report at the end of this year, and in there it will show our targets, the standards in which we're going to comply, and how we're going to be measured. We will have at least 50% renewable from the day one, and I've got a drawing on that later on in the presentation. We will be going underground, and there are a number of strategic ESG benefits that come from that. We will be focused on biofuel for our transportation. When the technology arrives, we will move to electric. At this point in time, we're not confident that we can do a sustainable and reliable approach in that regard. But our underground mine will be electrification ready. We will have wireless, we'll have all the electrical systems ready to be converted once the technology arrives. And let's hope by 2024 it's there. So we're planning for net zero in 10 years. The market overview. We've all read, and I won't labour this point, how strong the market is, especially for EVs. And we're predicting a 25% growth per annum. So we're here at the right time. If we look at the lithium units, they will be growing at least 20%, but the sector in which we want to play, which is the lithium hydroxide sector, is growing at 25%. So we're in the right market. And we've got the right supply to meet that market, given the cost advantage spodumene has over carbonate to convert to hydroxide, at least 17%. So if we look at the supply, we believe that the deficit will start presenting itself as early as 24. We've looked across the spectrum here. We've looked at broker consensus. We've looked at a number of the subject matter experts to see what their view is. So we've taken a P50. So our view is 24. Some are saying it's here today. And based on some of the spot prices, you think there's scarcity pricing already occurring. And some are saying it could be as late as 27 and 28, given this supply that's presumably coming from other parts of the world. So our view is, as I said, P50, and we're targeting 24. And our timeline is all around that date. So a snapshot of the Kathleen Valley asset. And we talk about world-class, we talk about tier one, and I think it's clear that if we look at the size of the deposit, and it just doesn't matter, it's not just about the size, but it also depends on the grade and its position on the cost curve. And I think those three ingredients, we are very strong and well represented. So there is Kathleen Valley, you've got Mount Holland, you've got Greenbushes, you've got Pilbara and Wodgina out there as fairly sizable hard rock deposits. And then you have a number of others that are there in this jurisdiction. The focus on underground. Well, the industry, to some extent, and some of the new deposits are moving towards underground, but it's just more than that focus. What we're looking at is there's a real benefit from an ESG perspective. If I was to mine Kathleen Valley by open cut, I would have to deposit over 1 billion tonnes of waste on the surface. In the underground, we're looking at about 50 million tonnes. If I was to mine this by open cut, I would need at least 40 trucks. And with that goes the extra drivers, the more maintenance, the bigger the camp, the more flights. In this, I'm using 8 trucks. So there's a clear benefit on the scope 1. So again, the conversation with our traditional owners in the area, when we say that we're minimising the impact on the land side and our footprint is a lot smaller, it's an easier conversation to have. The other point of difference is a design of our flow sheet. And this is grounded in substantial amount of test work that we've done over the years. There has been a benefit for us to be second mover. So we've been very careful in understanding the challenges that some of our competitors have had. We've factored that into our test work. We've based the design on the outcomes of that test work and experience that a number of the colleagues around the table that I sit and the board. Now, there is no question that DMS circuit works when you've got a very high grade. And our test work has demonstrated the efficiencies around recovery, if you've got 1.7% or above, are very significant. But what we're trying to look for is a reliable operating range. When your grade moves, we want that consistent recovery. And we found that the whole of ore flotation is much more resilient and robust across a range of grades. The other compelling feature is the quality of the water that we use in flotation, which is very pivotal in the recovery. Our water isn't hypersaline, so that we can use that water and it promotes very good flotation. The tenacity of the froth is excellent. The point that I want to draw out in this schematic of our flow sheet and plant is the location of our renewables, the solar farm, the wind farms, and the proximity of the power line and some of the other infrastructure that we've got. It's well located. And we're getting some very competitive pricing from third parties around the renewables. Another way of demonstrating the location and its benefits is to show the precinct that it's located in. There are at least 7 other underground mines in this area, and 2 of which I've worked in. And therefore, if you're a mining contractor, and the ones that we're talking to, the synergies where they can bring fleet and personnel and move them across that area has been very beneficial and been demonstrated in some of the quotations we've received. The timeline, we are progressing for a mid-2024 first tonnes. We're close to concluding our DFS, which is within our allocated time. We're actually in the final throes of publishing, getting ready to publish our DFS. And in parallel, we are also talking to a number of offtake parties and the financiers. But we raised some money back in August in order to prepare ourselves that once we conclude the design and publish our DFS, we're in a very good position to secure long lead items and pay down the deposits that we need to secure those production slots. And I think, again, given the challenges that the world is experiencing with deliveries and freight, the earlier we get in and lock those orders away, the more reliable the end date becomes. So we were forewarned to be forearmed on this regard. Now, there is a number of near-term objectives. Concluding the DFS is the main one. There's a number of approvals that we're working through, and they're on schedule. But we're also started a fairly significant pilot operation where we're producing over a tonne of concentrate so that we can send that to customers so they can do their pre-qualification. But also we want to do some test work around our downstream processing. Test things like reagent consumption. So that pilot work is underway now, and we're starting to see some early cons coming from that. The other thing is around building the team. We've got a very full agenda when it comes to building this within the 2 years. So the task I have is to build that world-class team to support me in that endeavour. And I hear that the resourcing constraints around town, but I think there's a sufficient value proposition that we offer that means that I will be able to attract the team I need to deliver this. Buldania. We're very excited about Buldania. We've got a drill rig down there at the moment doing some further drilling to expand our resource base. It's safe to say this area is very rich in M&A. There isn't a day that doesn't go by that I'm not approached on Buldania, but we're very, very interested in keeping it. It is part of our long-term mineral inventory, especially if we're developing our refinery. So we're very excited about the work that's coming out of that, and time will tell, and we will publish our results in due course. There is quite a universe of potential customers that we are focused on. We started at the OEM level and we're working back. We want to ensure that we've got all the potential customers within our view and they know who LIONTOWN is. And it's been a very robust process. So, which then leads me on to our strategy. The key, and again, I did some research, a lot of due diligence before I joined around the learnings from some of the unfortunate casualties of the first wave of lithium producers. And the quality of the offtake, the terms and condition, the counterparty, the geography, it matters. And we've been very deliberate in not only focusing on the geography, which you can see there, we're going to all corners of the planet in order to secure the offtake, but where they sit on the value chain is important as well. Because the more insight we get on how the value chain operates downstream, the better we are and the better prepared we can be in order to meet that requirement, especially with our downstream aspirations. And when I talk about downstream, I'm completing the circular economy here, right to recycling. The other area of focus, and we're watching Ken's moves quite closely and how the spot market is unfolding. We are very interested and I like the intent, and we've got some of our offtake assigned for that spot market because I'm keen to also promote that. Because I come back to where the rent is being extracted from this value chain. And it's clear the converters have extracted a significant amount of rent. And if we look at where mining historically has come from, the first point of saleable product is usually the point that extracts the best margin. For various reasons, the risk that we take on as a raw material producer should warrant a better return. So we will have about 10 to 15% of our book for spot. So just to wrap up on this, there's a strong lithium market and the fundamentals are structural. As someone said to me, Tony, you made the move at the right time for now. Well, I actually think it's more than just now. We've got some of the best undeveloped hard rock spodumene mines in the world in a fantastic jurisdiction. We will position ourselves with strong ESG credentials, which I've already outlined. We're releasing our DFS shortly, and we're very excited about the outcomes. And we're preserving valuable options. Our offtake optionality, and that also sits with tantalum, because we are producing tantalum as another product, and we're studying further value-adding opportunities in the downstream. So thank you very much for having me today and listening to me.